Hey everyone, John and Ray here, and today in the market psychology video, we're going to be taking a look at a very nice trend pretty much from the start of the day on the S&P here. We had a very nice move up after the small gap down from yesterday, and yesterday had some bearishness in it, but mostly ended the day in a range. Had a range right here into a range right here, not really a whole lot going on. So when we gap lower, that's going to be seen as an attempted breakout, and with all of that wick at the bottom, I think you can kind of figure out what happened, right? It failed. Sellers failed to break out of it, so we're likely going to be in a range, and we should be going back to the highs of that range. But that's when things start to change a little bit, because we actually get quite a bit of bullish strength on this move up. The second candle of the day does kind of paint a little bit of a picture, but really it comes down to looking at the third and fourth. We have the sellers trying to fade off of the gap fill, likely also selling from the range highs, trying to drive the market back down. If sellers waited for this candle to close, which a lot of traders will do, they'll sell underneath it. And all this managed to do was trigger them in and immediately push back against their stop with a very aggressive bull candle. That is an obvious trap, and it could spark a pretty big move. And that is a beautiful reason to become a buyer to drive the market back up towards the highs. Now, in terms of the move back up towards the highs, we're looking for momentum to potentially get the move up towards the range highs, right? This range high obviously isn't the one, because that was just a trap. So we're probably going to the next one. Now the next one came in right here, and this also coincided with an area of resistance from the nightly newsletter. So make sure to watch that. That was also the trade of the day video. I don't have that one marked on this chart, mainly because it requires more information than what we see here. But that was another nice trade fading those highs. They push down off of that area. We push above that range high. They try to break out above it and hold it as support, and then fail back down. And that is a very obvious area that selling pressure is very likely to continue, mainly for a couple reasons. We're still at a range high. Sellers are giving it another attempt to push down, and just like down here, we trap the sellers. This time we trap the buyers. The buyers tried coming in, very aggressive bull candle, almost engulfing the prior bull candle, triggering in buyers and immediately pushing against their stops, which would be right down here. A lot of buyers are not going to hang on through that, realizing that as soon as they got into the trade, they're immediately wrong. It doesn't make any sense to hang on to that type of trade unless you plan on scaling into a big position. And that allowed the sellers to shove the market right back down into an area of obvious support once again. Now, with the sellers taking over so aggressively to the downside, we would start to think, well, maybe this is a range and we're going to fade all the way back down to the lows. It's definitely possible, and that was a beautiful sell to get it going. But then when we come down into that same area of support, we come back into the gap area, we come back into the prior week open, we come back into that same range from earlier, what do we find? We find that the sellers lost all their steam, right? They shoved the market down, a huge bear candle, and then absolutely no follow through. Now, that alone usually isn't enough to be a buyer, but when they followed up with another bull candle after somewhat of a triple bottom down here, right? We closed there, we opened there, we came back and tested it, still nothing happening at that price. That's a nice reason to start getting in aggressively above, looking for another move higher. The assumption is, with such a strong move up, even though we are in a range, this could easily just be a range breakout into a pullback for a second leg back up towards the highs. And that, in this case, is what happened. Now, if you chose not to take the more aggressive entry here, once we slammed higher above all of the sellers' stops, right? The sellers, maybe they sold here, maybe they sold here. Either way, when you slam above an obvious area of stops and they break out above it and hold above it, that's a really big clue that if you're not in down here, you should probably get in here, because this train is leaving the station and it's going to move fast if you don't jump on board. So a beautiful run right back up towards the highs, and that just kind of solidifies the range once again, because where are we? Double top right on the highs. So we're still in a range, and that's something important that you need to keep in mind. This is a wide enough range where you can sell the highs and buy the lows, but a lot of times ranges have sentiments. In this case, it has a bullish sentiment, so buying is a little bit more reliable. So that's going to do it for this one. Beautiful combination of market psychology in combination with technical analysis. Hopefully you learned something. Hopefully you found it interesting, and we'll see you next time.